Hey, this is Chris Reicher, branch manager for Churchill Mortgage on Byron Center Avenue, and I've got with me financial expert Steve Vanderwey, who's going to share with us a little bit about what he's seeing as an obstacle to the success of his clients and the success of clients here at Churchill Mortgage. So Steve, why don't you share with us what you're seeing in the lending industry right now?
Well, I wanted to share what I call bullies in the financial industry, and one of the bullies in the financial industry is the banking industry, and I'm going to share that in the context of understanding what is an asset. So if I had to ask you, Chris, what are some assets that you own, things that you consider to be assets?
Well, I'd say my house is certainly
Your house
an asset.
is a huge one. Yeah?
Very grateful to be
biggest
homeowner.
asset for most people.
Yep. I've got a car. Minivan for my wife, a boat.
A boat. Yep. Those are all assets.
And then a little bit of retirement
savings account, 401ks, IRAs, things like that. Those are all assets, and I think most people get that. Those are things that improve your net worth.
Yeah.
Now, what would you think would be an asset to a bank? What's a bank asset?
Well, you drew here a nice little bank. I would
Building.
imagine the building itself would be an asset.
It is an asset, but it's one of the smallest assets the bank has, and really it's more of an expense sometimes.
Okay. Well then, I mean, they're going to have a lot of checking and savings accounts that people put with them.
You put your money in the bank, right? And then and it's an asset to you. You'd think it'd be an asset for them. The reality is the money that I put in a bank becomes a liability to the bank. As soon as I put it in, they have to start paying me on that money, and that's a liability.
Okay.
The bank assets are their loans. When banks lend money, whether it's credit cards or cars, payments, home equity loans, mortgages that they hold, those are assets to the bank. And so when you see a big bank merger where there's a $8 billion bank merging with a $10 billion bank to create an $18 billion bank, all of that is $18 billion of loans that they're lending out commercially and to consumers. And the banks are very, very good at lending. And since the financial crisis have times 3 increased the size of their assets that they're growing. And so my point in calling them bullies is not that the person behind the teller behind the counter who's really nice and every time you go in and you say hi, that's right. That's not the point. What I'm saying is the business model of the bank is directly opposed to what your goals are. I know your goals are debt freedom. I've seen you in the plans that you have for yourself and for your clients. What I'm saying is that the bank's business model is lifelong debt. It's their goal that you would continue to borrow money, percentage of wallet. These are all terms that they use to keep people in debt for as long as possible. So as you look at partners, the bank is not a partner. The bank is somebody that's diabolically opposed to what it is that you want for you and your family long term.
So it's not consistent with thriving and with financial peace.
That's right. It is not at all. And so I just want people to be aware that what the goals are for you and the families that you serve are different than the goals that make for a successful business model in the banking industry. So I appreciate you. You could say, well, why doesn't Chris lend money too? Isn't he the same? It's absolutely not true. What I know about you is that you are all about helping people become debt free. Right. There's an abundance of people that need to buy their homes and need some money in order to purchase a home and then pay that off. And the tools that you give people in order to be the family that does that is what makes you such a valuable partner.
Thank you, Steve. I appreciate you sharing that.
Good. Thanks.